What if I told you that one man pulled off the biggest financial scam in history, stealing $65 billion and fooling thousands, from billionaires to charities? This is the shocking story of Bernie Madoff's Ponzi scheme. How it started, how it grew, and how it all came crashing down. Let's dive in. Bernard "Bernie" Madoff was a well-respected financier and former chairman of the Nasdaq Stock Exchange. He founded Bernard L. Madoff Investment Securities, LLC in 1960, initially as a legitimate trading firm. Over time, he started promising consistent and high returns to investors, claiming to use a proprietary split-strike conversion strategy to generate profits. However, in reality, there was no actual trading happening. Madoff was simply taking money from new investors to pay older ones, the hallmark of a Ponzi scheme. The scheme lasted for nearly 40 years and defrauded over 37,000 victims across 136 countries. It included high-profile investors such as Steven Spielberg, Kevin Bacon, and Nobel laureate Elie Wiesel, as well as major financial institutions like HSBC, BNP Paribas, and Banco Santander. Madoff managed to keep the fraud going by leveraging his reputation and manipulating financial records to show false profits. The illusion of steady returns attracted even more investors, feeding the cycle. At its peak, Madoff's firm had assets worth $65 billion, though in reality, only a fraction of that money actually existed. The scam remained undetected for years due to Madoff's influence in the financial world and the failure of regulatory agencies like the U.S. Securities and Exchange Commission to investigate properly despite multiple warnings. Madoff maintained the scheme through fabricated investment reports, falsified trade records, and client statements showing fake profits. He used funds from new investors to pay out withdrawals to older clients, making it appear as though his investment strategy was highly successful. The scheme continued as long as more people kept investing and few tried to withdraw large amounts at once. However, the 2008 global financial crisis triggered massive withdrawal requests from Madoff's investors, exposing the fraud. As clients demanded $7 billion in redemptions, Madoff was unable to cover the withdrawals since there was no real money invested. In December 2008, he confessed to his sons, who worked at the firm, that the entire operation was a Ponzi scheme. His sons reported him to authorities, leading to his arrest on December 11, 2008. Madoff pleaded guilty in 2009 and was sentenced to 150 years in prison for fraud, money laundering, and perjury. The court-appointed trustee, Irving Picard, was tasked with recovering lost funds for victims. Over the years, Picard managed to reclaim more than $14 billion through lawsuits and asset recoveries, returning a portion of the lost money to defrauded investors. Bernie Madoff died in April 2021 at the age of 82 while serving his sentence in federal prison. His firm was completely dismantled and his assets were liquidated. Although some victims received partial compensation, many lost their life savings. This case remains a cautionary tale about financial fraud, highlighting the dangers of blindly trusting even the most prestigious financial figures and the failures of regulatory oversight. If you ever faced any scam, let us know about that in the comments below. And don't forget to like, share, and subscribe to the channel for more amazing content. Thanks for watching. See you in the next video.